Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone, checking in on the market. So we're looking at SPY, and one thing that I look for when I see a pattern, and whether it's an uptrend or a downtrend, is when you have a pattern of every single day being a lower high or a higher low, you look for that to break. So we have every single day now, 7 days in a row of a lower high. So it will be a notable shift in momentum if on Monday the bulls can break 271. So if we don't break 271, it's just another day with a lower high. If we do break 271, that's the start of a potential short-term bounce to be keeping an eye on. Aside from that, we're watching the shorter term time frames on all of these markets. And right now, I like the clarity of keeping extended hours off when looking at SPY. If you turn extended hours on, we can see Friday we had some big spikes and big upper wicks, and the volume behind that was not legitimate. You know, the price wasn't really going up to those levels at that point. So just to keep it for clarity's sake, we're going to look at with extended hours off, but I absolutely will be watching extended hours action Monday morning. So in order for the bulls to try and get this bounce going, we had a ton of volatility Friday. We dropped all the way down to lower lows of 262.29, and then we saw a huge bounce, and there was huge bullish opportunity within that $6 bounce in the S&P 500. And, you know, we saw some of these other individual names with big time follow through, and then we pulled back significantly from that top. So there was beautiful direction, beautiful volatility for both directions on Friday. But what it gave us is a higher low attempt at the end of the day as well. So if the bulls are going to change this hourly trend, we have the low, high of the bounce, higher low, and Monday the bulls need to break 268.78 to try and get this follow through with the next resistance 278.81. If we zoom out a time frame to the 4-hour chart, we can see it's a very clear lower high pattern ever since that daily bounce attempt led to lower lows. So lower highs and lower lows very clearly, and to break the lower highs on the 4-hour time frame, it's that 271.81 level. So that is the second most important level for the bulls to be watching on Monday. Keeping in mind that even if we break this 4-hour downtrend on a bounce, we have to form the higher low and higher high confirmation of the trend change. Breaking the lower highs is great, but that's not enough. We need that higher low and higher high follow through. Bearish scenario would be if we start Monday breaking 263.66 support. We're then going to be right down to 262.29, and again there's a lack of support immediately after that level, so we're going to be looking at the weekly supports from February if we do drop down below those levels. 259.05 would be the next level, and then 254.67. Again, I've given my opinion on the monthly longer term time frame. I am looking for a bounce to follow through before breaking the February lows to maintain the monthly uptrend. And if this uptrend is going to be lost, I believe it will be a head and shoulders like pattern where we have the left shoulder, the head, and if we bounce and form a lower high and then break the uptrend, that's the scenario that I'm looking for. If we change the bullish uptrend, I believe that is how it's going to play out. So that's something that I'm keeping an eye on. And if you have a longer term position that's very heavily weighted bullish in this market, perhaps on that bounce and that lower high, even on the weekly time frame, looking for that lower high on a bounce, that's when you begin to hedge some positions, whether it's, you know, shorting SPXL longer term, maybe buying some longer term puts, however you choose to do it, hedging your portfolio in case we lose this monthly long-term uptrend. That is something you want to be considering and establishing as potentially part of your game plan. Again, for those looking to buy the dips, have to be protecting your trades, have to be putting stop losses. Otherwise, you can get in a lot of trouble because, again, when we break these support levels, because there's nothing nearby, it gets magnified very quickly to the downside. So the good thing about Monday is we have some nice tight ranges to be watching on the hourly, and it's going to be pretty clear first thing, you know, oops, we broke support, we're heading back down to test the lows, or all right, we broke resistance, now we're going to see if the bulls can break the 4-hour lower high pattern and get a bounce going. If we change the hourly trend, I then zoom out to the 4-hour time frame and watch the clear downtrend there. If we break that lower high, that key 271.81 level, I zoom out to the daily chart and anticipate that the daily chart is just going to form a lower high because the last one was 281.15. If we then were to change the daily trend, I zoom out to the weekly time frame and anticipate a lower high is going to form because pretty much the all-time high is our last high level to be watching. So it's one time frame at a time, one day at a time, and we're going to be monitoring very closely any bounce that does get going, what kind of volume behind it, and whether we can believe that bounce or not, or whether the bears are just going to jump in and crush every bounce attempt, as we have been seeing the last couple of days. IWM, more extended in the sense that we have 8 days in a row of lower highs every day. So the bulls need a break of 149.42 to change that pattern and try and see a bounce. Again, anything on the daily under 158.86 on a bounce attempt will just be a lower high. Looking at the 4-hour time frame for IWM, the lower high pattern here is 149.82 to be watching. So the bulls have to break that resistance level if they want any kind of bounce potential to get going. So pretty much if we cannot break 149.82, the bulls don't have much hope of a trend change. QQQ, so it too has seen 7 days in a row of lower highs. Have to break that pattern with a break of 169.96 for any kind of bounce to follow through. We have the tightening hourly pattern to be watching here as well, very similar to SPY correlation. We have the low of 164.23, high of the bounce was 169.96, higher low was 165.54, and you can see after hours we did get some fade up, a little bit of some bullish follow through, giving us a more clear higher low on the hourly. So we're now watching this tightening hourly equilibrium into Monday. 165.54 to 169.96 is the range to be watching first thing on Monday. Again, it's going to be the same thing here. If we change the trend on the hourly, we zoom out to the 4-hour. The 4-hour resistance is 172.08. If we break that level, we zoom out to the daily and just look for a lower high to form compared to 178.26. So we take it one time frame at a time. Otherwise, we just watch the continued downtrend. If we can't break these 4-hour lower highs, bears keep complete control. Weekly time frames are certainly weak, all over the place with a month of straight downside, a lot of bear volume. So because of the significance of the pullback on these weekly charts, we will be looking for just a weekly lower high to form when we do get a bounce. And obviously we are going to get a bounce at some point, and you have to think about psychologically how that would play out. And that's the reason that I think that SPY, if it is going to lose this monthly uptrend, it's after a bounce, because psychologically the market will say, sigh of relief, we got this bounce. That was brutal, but the bulls are buying a dip just like they've been doing for the last decade, and we're in the clear now. So we start to bounce, we set that lower high, we start to fade, the bull volume shrinks, the bear volume starts to come back in, we start to head back down to recent lows, and then people get really scared and say, uh-oh, that was our bounce attempt, we're heading down to the lows again. That's when the fear really kicks in, after the bounce gets going to a certain degree and after that bounce fails to get any follow through. So that's something psychologically that I'm watching for potential of a trend change in the long term in this market. XLF on the daily time frame, lower highs 7 days in a row as well. 25.52 has to break to try and change that pattern. Again, I'm watching the 4-hour time frames for lower high patterns very clearly over the last 6-7 days, and 25.84 is the level that the bulls have to break for the financial sector to break the lower high pattern. We still saw significant bets being made on long-term financial calls into June 2019, and we're talking hundreds of millions of dollars. Again, those people can be wrong. That big money can lose big money as well, but we are certainly making note of it that bulls seem to be positioning themselves, anticipating buying of the dip, at least in the financial sector. Same thing for the financial sector. Everything's so correlated to each other that, again, we have to see the 4-hour trend change. Then we look for the daily lower high to be set. If we get the daily trend change, we look for the weekly lower high to be set, so on and so forth. VIX still looking up at 28.84 resistance. We topped out at 27.52 and saw some profit taking. So we've seen higher lows on VIX at this point 7 days in a row. That's an opposite pattern that we're watching. A break of 23.33 will break that pattern and will have us looking for the equilibrium on the daily still in play if we lose that level. And then we would look for the higher low compared to 17.06 and a continued tightening range. But as of this point, if the bulls hold 23.33 on Monday, they still have complete control of this daily move, and we're still watching that 28.84 resistance. And the weekly time frame, I like the daily time frame better for clarity. Let's look at what some of the TVIX UVXY setups look like, because they already got their bull break for continuation, and you can see just how much stronger it is for TVIX and UVXY. Again, there's different calculations. They're not trading solely based on VIX. They are looking towards futures as well to a certain degree, and that has led to the more bullish break on these instruments, these leveraged instruments, than on VIX itself. So certainly watching VIX overall, but noting that these names are getting significant follow through, and they've seen higher lows on their daily time frames for 8 days in a row. So again, for UVXY and TVIX, the low of Friday is a support level that the bulls want to hold on Monday to keep that pattern intact Otherwise, we'll look for some healthy daily consolidation. And of course, we would look for a healthy daily higher low to form after the significant 8-day bull move that we have seen. So that's where we stand heading into this coming week. Again, you want to establish game plans for your short term and long term. Short term, if we change these hourly and 4-hour trends, I'm going to be looking to buy the dips and establishing some positions to potentially swing trade for a couple days to get this bounce going and to look for that daily lower high to form. But I would be protecting my trade ideally at break even stop loss, and then ideally moving it up with the bounce. And noting volume, of course, would be a significant factor in how long I let those bounces play out. But because I'm looking for a short-term bounce, doesn't mean that my midterm strategy is going to be the same. Because like I said, midterm, I might be looking to hedge some longer-term portfolio positions that my parents have by entering bearish positions, either shorting SPXL and trying to have some of that time decay in my favor, maybe long-term puts. But I want to see a weekly lower high set on SPY before I would look to begin establishing that potential hedge. Because again, the last thing I want to see with my parents being, in their 60s, their mid-late 60s, is for the monthly uptrend to be changed on the overall stock market and to enter, maybe a couple years of a pullback. So I'm going to be watching for the potential of that weekly lower high to form, of that monthly lower high to form if we do get a bounce. But first things first, again, I say one day at a time because it's very important that we don't lose sight of what's happening right here and now. And that's a clear bearish control still very easily on the 4-hour and hourly time frame. Have to break those patterns early this coming week to try and give some relief, some confidence, get the bulls moving. If we can't break those 4-hour lower highs, it's still all bears into next week. So I hope you have a good weekend. Hope it's not too stressful out there for everybody. And we'll take it one day at a time as always. We'll see you Monday.